You want to trade price action. And in order to actually trade price action successfully, one of the most important things is to recognize context. How is the trade behaving? What can you kind of expect from the price move that is unfolding in front of you? And of course, when you say expect, you can always be wrong. Something behaves a certain way and then it breaks out, or it goes the opposite, it reverses. So it's not like this is foolproof, but you do need to have some kind of idea what kind of probability you're dealing with, that you're in a trading range, or whether you're in a breakout or a bull trend or a bear trend or whatever. And we'll look at all of that just in a bit. So once you have context, then you are more likely to then look for trades, because you're going to trade them differently. If you are in a bull trend, you're trading it differently than when you're in a bear trend. You trade the trends differently than when you're in a trading range. Or maybe you don't trade at all when you're in a trading range. Some traders don't trade trading ranges. Some people don't trade trends because they can't do it. They're not very good with it. And that's not a judgment, by the way. Everyone has their strengths and their weaknesses, but it's important to recognize what the context is that's unfolding in front of you so that you can adjust accordingly. And this is going to be the focus for today's video, so that when you are actually going to create your price action strategy, you have it based on in reality rather than in some kind of imagination. Anyways, let's head over to the charts. Here we go. I forgot to mention, I have a Telegram channel. You can go in there if you want to follow and see how I trade and how I manage trades. Sometimes I call it live directly. Sometimes I inform it a little bit later. It depends on how busy I am. Anyways, let's get started here. The link's in the description or the comments. So you are going to have, let's actually just scroll up so you have a clean chart, and let's take the little path one. So when price is moving up like this, you are in a bull trend. What is the characteristics of a bull trend? Well, price keeps pushing higher. Okay. So you are having a low, then there is a higher low, then there's a higher low, there's a higher high, higher high, higher high, higher high. The highs keep going higher, the lows keep going higher, and it's forming a channel and it's looking like it's up. That is a bull trend or a bull channel. Depends on how you want to define. Some people say bull trend is something that is over a larger time period, and so they would just say it's just a bull channel. It doesn't really matter in my opinion. They're just words. You just need to be able to recognize what you're dealing with. The bear trend, on the other hand, is the exact opposite. You have things going down, and you can see that you keep creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, so this is the stylistic view of this. Now, obviously, markets don't behave exactly like that. Markets are a little bit more messy, but these are the two. Oh, and I forgot the last one, of course, which is you're gonna have a trading range. A trading range, it's basically moving sideways. It's basically just doing this, but it's not going really anywhere. It's just staying somewhat in this range. Okay, it's pretty easy to see, right? This sideways price action, up price action or down price action, right? All right. So let's actually go and look at the chart and see if we can identify that. And by the way, I do highly recommend to not just watch me do this, but after you've watched this video, go and open any chart on any time frame and look for these things. Okay. So here we go. This is, you have a high here, then you have a lower high here, you have a low and a lower low and a lower low and a lower high and a lower low and lower high. Do you see what's happening? We are going down, right? Here, we're somewhat ranging, so it's consolidating here, somewhat of a trading range here, and then we have a further breakout and further move down. But overall, this whole move down is a bear channel downwards. That is not super hard to recognize. Then over here, we have, and this is something I've, by the way, called out in my group. It's a grid trade. I don't usually trade grid trades, so this is very small. It's just more experimental trade, even though I have traded extensively. Anyways, we're going up here, right? Do you see the structure? We are going up. You barely can see the highs and the lows because it's just moving up. The pullbacks are very small. So this is a small pullback bull trend going up, where you basically are like, I want to like to see a bigger pullback, so I enter, and you keep waiting for it, and you basically miss the entire move. But it is a bull trend, and you know those small pullback, bull trend, all that. By the way, I've learned that from Al Brooks, just to give credit where credit is due. So this is a bull trend, right? It's going up. It's just going up. It's going up. You have higher highs here, here, here. You have higher lows here, here, here. Even though the pullback is not very significant. All right, let's look at a different chart. This is still USD CAD with it, which is the same thing, by the way. But you can see now on a larger time frame, this is the daily time frame, we are going sideways. This is a trading range. You see, we are literally just going sideways. And here you have a tighter trading range. Here you have a tighter trading range. But overall, this whole thing is a trading range. You're just dealing in trading range. Then you look at this, which is what we just looked at. Right, this one we've looked at on the 1 hour, which was the bear trend, bear channel, and there's the bull trend, bull channel. You can see on the higher time frame, this is just a breakout. Every bar is green. It's just moving up, right? It opened here, closed here. Next one opened here, barely pulling any back, closed here. Same thing. It's just this is a breakout, which you will see. When you are dealing with a small pullback, bull trend or bear trend, it's basically a breakout on a higher time frame. Okay, so we got that. Now let's look at USD JPY. Right, we are on the daily. You can see what are we dealing with? Well, we have higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Big pullback, deep pullback, but then just keeps going up and up. You can say the entire thing here is a bull trend, right? It's just moving up. You can forget about these things. Oh, actually, I'll just delete them. It's all moving up. So this is a bull channel. Now compare this one to USD CAD. Let me move a bit over. Do you see how tight this is? You know how it's barely any pullback. Do you see the characteristic versus this one here, which is a really quite a broad channel? It doesn't matter how if you want to include all the highs, like you can draw things differently. You can have it like a wedge here. You could we will cover trend lines and how to draw them in another video. You could do something like this, treat this like an overshoot. There we go, a bit more lower. Though it's a rather large overshoot. I personally wouldn't do this, but you get the gist. It is moving up, but it's rather broad. It is broad. The pullbacks are pretty deep in here. You have deeper pullbacks. You can measure it. Take the measuring tool right here. You have a pullback right here. That's like 907 pips, right? That's a pretty steep pullback. Now you can go, for example, here to USD CAD, which barely has pullbacks. We're dealing on the hourly. From here, pullback is lowest is here. That's like 26 pips. So you see the difference, right? And so what I would recommend that you do to actually get a feel for this is to go through all the different currency pairs, scroll to any time frame, any time frame, and just go and see what you can find, right? Oh, look at this. We had a nice little breakout here from this kind of trading range, and then it just went sideways again. You could maybe say it's a broad bear channel because it does keep going lower, so you have highs and they stay the same, but then it starts to go lower and lower and lower, and the lows are going lower. So you could say it's a broad bear channel. It doesn't actually matter what you name it. The broad bear channel and broad bull channel, they behave similar to a trading range. They are just tilted in one direction, especially when there's something like this. Of course, when you're something more aggressive like this here, it is a broad bull channel in the overall context. But look, this one here, it's pretty explosive. These moves up here, they're pretty strong. So you would trade them differently. This here is all breakout stuff, in here, barely any pullbacks here. They're just all green, basically. But overall, it is a a broad bull channel, but within it you have very strong breakouts, and you have that in any kind of trading range as well. So you have trading range here overall, and you have breakouts, right, where it makes sense to always be long depending on how you're trading. So get a feel for it. Can you identify trading ranges? Can you see that this is somewhat of a trading range? Can you see that this is it's moving up? That is an important part. And then what you can do is you can start zooming in and be like, okay, so how does trading range behave, right? How does it behave? What are the characteristics of it? And what you will see is there's different characteristics, right? You can see the bars. You have a lot of overlapping bars. So for example, here the breakout. Do you have overlapping bars? No, you don't. You have some prominent tails. This is a pretty steep sell-off here, but it's got bought up right away. You just have move up, and you can see like you have an overlapping bar here, but then this one is closing there, and you have a little bit of a pullback, and boom, it goes up again. Another consolidation here, moving up, right? You have consolidation in between here, but then you keep moving up. You can see how there's gaps between the bars, right? You can see, for example, that there's a gap between this low, the wick here, to this high here, right? This is a gap. It wasn't closed. And these things are they have it everywhere, these kind of gaps. This is characteristic of a breakout, that things just keep moving up, which is really important to see. Because when you're moving up, and then you can see how here you start to consolidate, right? And you start to go into a more trading range price action. So what do you see? You see overlapping bars, right? You have a sell-off, got back up. You have wicks, so it tried to go higher, got sold off. Wick again, then it goes down, it got bought up again. Do you see how it's overlapping? How much the bars are overlapping compared to here? It's a very different feel. And then here you have a breakout, then you have overlap again, you have another breakout down, but then the breakout gets bought up again, right? This kind of V-shape is happening here on a lower time frame. On a lower time frame, this would look similar to this here. So it always depends on what kind of time frame you are. We're on the daily. You can see this in any time frame, right? We're in 2018. Let's go forward so we can go to a shorter time frame. Let's go up 21. Let's go further. Actually, I just go to the 1 hour. It will adjust itself. There we go. All right. So we are on the 1 hour, and you can do the same thing. What's important is what is in front of you and how is it behaving. Here you can see how it's getting broader. You see how you have a good sell-off at first. It tries to reverse, kind of starts to go in trading rise price action. What do I mean by that? Well, you can see how it is staying within the price range, how you have overlapping bars, how the bars are small compared to like here, where you have larger bars here. Some of them are also quite small, but overall there's clear downward movement. While here you have up, you have down, up and down. Or as Al Brook liked to say, if there's big up, big down, big confusion because you don't know where the market is going, you're probably in a trading range. So you can go down to the 5 minute, right? You can do the same thing. You can look at the 5 minute and you can see, look at that. What is this? This is trading range price action. And then breakouts. The breakouts seem to be like, oh my God, it's breaking below the range, right? You have a range here, but then you have a pretty strong breakout down just to be bought up again, which is typical for trading ranges. That a lot of the breakouts are just fake outs, which is why some people don't trade it, because you need to have a pretty large stop loss in order to scale in or to manage the trade appropriately. So that's one of the characteristics. Now, there's a few things. So markets do have inertia. So if you're in a trading range, 80%, I haven't actually calculated that. This is Al Brook's percentage. Maybe it's right, maybe it's wrong, I don't know. 80% of breakouts fail. So if you're in a trading range, you're most likely going to stay in a trading range for a while. Now, obviously, when you look at any chart, breakouts do happen. So you do have a 20% chance that the breakout is going to succeed. And you need to be aware of that. And you need to be aware, when is the breakout really happening? When is the breakout actually just a breakout and then enlarging the trading range and it's just going to revert again? These are all things that you need to consider, and which we will look at in the future in other videos. But for now, it is just important that you actually know what you're looking at, so that you know how to trade it, right? So let's say, for example, here, it's not a super tight channel here on the 5-minute chart. And the way to look whether something is 37 pips, to look at it is, can the opposite movers, so you have the bulls, which are buying things, right? So it's moving it up. And you have the bears, which are selling stuff. Can the bears make money? That is when they can't really make money, or it's very difficult to make money because the pip movement is so slow. We are excluding high frequency trading and this kind of stuff. Then it is this is in something like this, it is possible to make money, but so you're not in a super tight channel. If it's a super tight channel, it's much more difficult. So you're in this and you're looking at it and you're like, okay, how do I trade it? Well, you need to get long because it's going up, right? So you're waiting for a pullback and you're getting long. And that is very different than when you're here. Maybe here you're staying away from it because it's just way too tight. So anyways, hope this gives you an idea what to look for. Go into your chart, actually look at the charts in front of you and see what you can identify. How is the price moving? Are there a lot of overlapping bars? Is it a strong trend? Is it breaking out? Or how big are the bars? How high is the range of, if it's a bull trend or a bear trend? How large is it, or how tight is it? Right? Try to get a feel for it, and then also experiment with different time frames. So when you have identified a channel here, I'm just going to take this as an example. We are on the 1 hour. You can be like, okay, how does this look like on the 4 hour? So you get a feel for it. You can see how here it appears, much tighter. You can see the big gaps between this low and this high, this low and this high. The wicks might be touching, but the bodies aren't. So it's still fairly, there's still gaps. There's still a lot of momentum. Once you start seeing things overlap, so for example, here you have a high, but then you have a pullback. There's no gap here, right? The gap isn't there. And if there's a gap, it gets closed very quickly. That again gives you an indication of how the trend is behaving. So if the 4 hour, how does it look on the 8 hour or on the daily, right? And you can see, wow, on the daily, okay, it's almost a breakout, it's moving up, not really much overlap whatsoever. We have some consolidation here, and then we start to have some trading range price action here with some overlaps, but we could have another move up again as well, right? And then you can look at the bigger picture. All of that, just play around with it. That's what I'm trying to get you to do, is just play around with it, get an understanding of what you're dealing with and how you look at the chart, and you will see how subjective it is. And I've already covered this in the first video, because you can say, hey, look, we are clearly in a bull trend, it's moving up. But when you are moving in and you're only on the 5 minute and you're looking at this, you're like, hey, this is a trading range, or it's a bear channel here going down. Because we can just do that real quick so you can see it. See if I can find it on here. There we go, right? You're like, look, we are moving down. We are making lower highs. We're making lower lows. And there's a lot of overlapping bars. It looks like this could be a leg in a trading range, right? The bars are small often, and then you break out just to be bought up again. So you've all of that. So you're like, hey, this is a trading range. And so you can see now how subjective it is. It depends on the time frame. It depends on how you look at it. It depends on how you analyze it. And that's all okay. But it is important to keep in mind that it is subjective, and that what you're looking at are not facts. Because there's so many people out there like, it's the facts in the charts. There are no facts in the charts, dude. There are things that are highly subjective that you're looking at in the chart, and you've trained your eye to see it in a certain way. And hopefully the way you're training your eyes to see it is going to be useful to make money, which is what we actually want to do. So once you're able to recognize the context, you can then start to use also some of the replay mode by clicking here and choosing any time frame, and just scrolling back and hitting the replay mode and then playing, and then see how quickly can you identify where you are. Because you need to start to look at, is this evolving to a trading range? Am I in a bear channel? Am I in a bull channel? Is it tight? Is it not tight? These kind of evaluations, you need to be able to do that. And the best way to do it is by simply having a replay mode and also just watching the charts every day, and then just asking yourself, how does this look like? And doing that will give you a better chance to then identify it correctly and identify it in a somewhat timely manner. Just to give you a real quick example here, I was long on here before I went short. I went long somewhere here, I believe, and started moving up. But look, it just looked like a trading range. It just looked like trading range price action to me. So I just closed it and I started to look short because of the bigger context. But anyways, that is useful to know that, hey, this is trading range price action. This is trading range price action. This, yes, it's a sell-off. We didn't go below the potential trading range that we're forming up here. That's important to know. Now, if you're looking for a swing down, you can hold it through the trading range. But if you're, let's say you're trading on the 5-minute chart and you know this is a prolonged trading range that's happening, you might be wanting to take profit much quicker. You might not want to take profit down here. You might want to get in, get out, and then buy and get out again close to the top. But anyways, we'll look at each one of those and how it is good to trade. I am not an expert in trading ranges. I do tend to trade trends much more and trend reversals. But I'll cover it briefly just for the completion's sake. And I'll refer you, as always, to Al Brooks. He has much more in-depth videos. He has a whole course around that. And it's been really useful for me to watch his stuff. So many of the ideas you see here are actually coming from him. All right. So this is pretty much it. If this video was useful, hit the like button, hit the subscribe button, share it with someone if you think they will benefit from it. I'm just sharing my knowledge of what I have accumulated as I've been studying this for a while. We will see in the coming years whether I'm consistently profitable or not. At the point of this recording, I wouldn't call myself consistently profitable just yet. I have been profitable in demo. I seem to be profitable on my live account, which I'm sharing every week, how that is going. But the basics that I'm sharing here, I am confident that I can do that. I'm not sharing any kind of super advanced concepts, and they are useful to acclimatize yourself with the markets. So anyways, I hope you have a good day. Take care. Bye-bye.